Good morning. I think we've had a very interesting morning so far, talking about demand, optimism, the future in shipping, and a general feeling that in many sectors the markets are low and can really have one way to go, which is to go up. And in shipping, as ever, perspective, that leads to the question of should we be buying, ordering, building more ships? And shipping as an industry is very dependent on sources of finance in addition to the owner's equity, and the strains on bank balance sheets, the regulatory requirements, etc., have made that finance more difficult to find than it has been at various times in the past. So I think it's useful here. We have a group of, I think, very senior shipping finance bankers to have a look at where money, where ship owners have found their money over the last few years, and particularly last year. And I've put up a screen, should be a slide. This diagram, as you can see, or this chart, supplied by my friend Michael Parker of Citi here, and it's taken from Marine Money's statistics, and it shows in 2016 which banks provided capital to shipping. And one of the interesting things is how at the left of the column it's dominated by, in some ways, the same old players as have always been there. I personally had expected to see more Chinese banks there, and we might hear a bit more from Bill as to why they're where they are and why there are not more of them there. The other interesting slide is to see where the changes are, and to see which banks have provided more finance to the shipping industry in the last year, and which have reduced their exposure. So with that in the back of our mind, I think I'd ask my first question to the panel, which is that in shipping we've really seen ourselves as a global industry, as a global market, and there has been a feeling that institutions have become more local in the last few years, maybe because of Brexit affecting people in the UK, uncertainty in the US politics within the EU. Is this something which members of the panel feel affects shipping lenders? Can I ask you to comment?
Yeah, I think globalization is of all times. That's not going to stop. There might be things like Brexit and the US administration and a bit of trouble in the EU at the moment, but I think globalization will be there and will actually be there also in the future. And some industries might temporarily have a more localized view. After the financial crisis, there were also some banks that retracted basically to their domestic business. but I think soon realized that, and it's actually happening now, I think, in the shipping market, where some of the financial institutions are, mostly the traditional older institutions are retracting to a more localized strategy. But there are definitely a number of others who are looking far beyond and international. And I think that's where, for instance, the Chinese banks come in. They are more and more doing transactions globally. And that's a trend that has... so when someone leaves the scene, there's a gap, and it will be soon, I think, filled up with different strategies, different banks, different capital. So,
Michael, from Citi.
Well, I think I think in shipping it's more binary. I think the banks that are in shipping have to be global. It's a global industry, and if you're not global, then you're not really banking an industry that is the most global of all industries. So the banks that are leaving by either choice, like Commerce, or by default, if you like maybe RBS for other reasons to do with the bank, I mean, they've gone, but I don't see DNB closing its offices in parts of the world. I think if you are a serious bank to the industry, you're going to want to be doing business with the major players, or the clients that you have banked and want to bank. So I think, in a way, we're in a phase where the regulators in Europe, for what is an industry where most of the bank capital comes from European banks, that the period of the regulators being on top of the banks that have exposure to shipping will fade as the industry recovers, particularly in next year, possibly with the exception of clearly drilling. But as that fades, so the regulators' pressure may come off, and some of my colleagues on the panel can maybe talk about that. But I don't think global versus local really affects any shipping bank that wants to be a proper bank to the industry.
So it's really affected the German and the British banks more than the others, is your feeling?
I think so. I mean, I think any bank whose portfolios were driven by, whether it was the KG system in Germany or driven by asset financing with all the problems that entailed, they have, if you like, come and gone, or at least come and are shrinking. I think those that were never in business because of a particular angle, if you like, but have always been essentially relationship focused around their clients, provided that we're able to get through this current phase and come out of it the other end. I think that frankly will continue. And of course, with the Chinese, we see, if you like, a new participant that in a way replaces the German capital, which replaced originally most of the American capital. I should say the light blue on that chart was merely designed to highlight the American institutions, because one of the questions I often get in Citi is, why are you the only American bank in shipping? From my own senior risk people, and that was to point out that Bank of America is also, and actually you can see there's grown in the last 2 years.
Has expanded considerably.
Has expanded considerably. So,
Michael, you...
Yeah, just like to add to this topic. I've also witnessed that some banks have said that they are becoming more selective. And I can, of course, understand that if a bank has been an active lender 10 years ago, building up a large shipping book, that book currently consumes quite a bit of capital. So there is a restriction on capital available for new clients, for new transactions. So automatically those banks will become more selective. Yeah, and some of these banks have said, okay, we prefer domestic customers over customers far away. But ultimately, as the panelists have also said, it is a global business. So you're financing a global business. That drive to a domestic focus has nothing to do with Brexit. It is probably more a result of restriction of capital for new transactions.
I will agree 100% with Michael and Michiel. Indeed, shipping is a global business. Any bank that's committed to the sector has a global presence. It has to have a global presence. But what you alluded to before, Dan, the increase in protectionism, and if we take a little bit more of a macro view, what we see is a paradox where the US is actually looking to close its economy, increase protectionism. And what we see is China. I spent the last 3 years being based in Singapore, doing quite a lot of business in China. And what you see there is the Chinese president arguing about globalization. You see China trying to connect itself to the rest of the world. There is this huge Belt and Road initiative they're working on. It's a 900 billion initiative. So intuitively, you would have thought that the US, which has benefited the most out of globalization, would be pushing for that. But bizarrely enough, it's actually China that is pushing for it. So, linking this back into shipping, it is a global business. When it comes to us in DNB, we are looking to do business globally, not just in our local market. And yes, there has been a slowdown in trade because of the increased protectionism, but that can only be short term. You cannot stop globalization, and that's how we are positioning ourselves as a bank.
Bill, that probably brings me to,
Yes, and,
to ask you, and maybe I should ask you a slightly different question, which is that I think we see with many of the large container ship orders, in fact, the larger orders placed for fleet replacement, people's first stop for finance is perhaps no longer the Western banks, but people looking at Chinese leasing companies. So I think we're very pleased you've joined us, and if you could give us some idea of how a Chinese leasing company such as yours looks at an international group of prospective borrowers.
Yeah, thank you. And my name is Bill, and Bill Go from ICBC Leasing. So ICBC Leasing is 100% owned by the ICBC Bank, and which also, in terms of the lots of measurement, ICBC Bank is so far the world's largest bank. And this good question comes from why the ICBC Leasing or also other China leasing company go to the shipping finance industry. It's sometimes we have to, because it's a globalization. For example, ICBC Bank already opened about over 100 in the branch in outside China, not in China, outside China, but not maybe a single branch did any of the shipping finance before, because the shipping finance looks very complicated and also need a lot of expertise in this industry. So after ICBC Leasing and headquartered in Beijing, we started to do the finance in the shipping business, or overall other branches of ICBC in other countries. They started looking forward also to look for the business. So back to the question, the containers. The container ships most built in China, also the China is one of the largest export countries. So you can see all these barks, all these ships are all built in China. So it's, there's a local domestic demand to push the banks or also leasing company to finance those ships. Also come from the shipyard, because Chinese shipyard capable to build these massive big ships. So it's come to the combination of all the requirement, actually, to push the ICBC Leasing or also other China leasing company involving those in the big project. For example, the last month, one of the top 3 and shipping company, and I couldn't disclose the name, but you already know the name, have decided to build about 9 and 22,000 TEU ships in the Chinese shipyard. So the first question, who's going to finance those projects? Because it's billions of dollars in the project. So of course, there's a traditional China export, import banks who would like to do this, but also Chinese leasing company also want to do this. Why? Because the return is stable and also very less risk. It's linked with the China export, import business. So the further China continue to do the export in terms of the box, there's a container shipping business will keep growing. The same for the dry bulk, maybe. Sorry.
But Bill, I think that is very much a Chinese-orientated. You can see the Chinese export industry, but the feeling is that the Chinese lessors are also looking beyond the Chinese market, beyond Chinese shipbuilders are looking to get involved in transactions which don't have that direct local Chinese component. Can you comment on that?
Yes, and for example, right now for the ICBC Leasing, 80% of the business actually come from outside China, and 50 actually is the European customers. That's why we are very popular and also put our face and in all the kind of event in the Europe, in the London, try to promote our brand, also promote to the European customers. All these transactions actually had very little connection with China. Even the ship maybe not built in China, but doesn't matter because those kind of project we like to involve in also support the shipping finance.
Great. Do any other members of the panel wish to make a comment on the Chinese perspective, as Bill has put?
I think we've seen a lot of transactions, and we have also been in between as an arranger of sale and leasebacks with Chinese lessors. It could also be existing ships. It's just a different part of raising capital. I think equity and debt for some situations with long-term employment or long-term charters back to someone who has the cargo for it. So yeah, existing ships, new buildings, and I think there have also been Japanese and Korean ships, new building ships being done by Chinese lessors. So they are becoming very flexible, and that's I think the word. It's pretty cheap and flexible capital,
and much appreciated by the shipping industry.
Of course.
But the volumes are typically much higher than a commercial bank could put on the table on a single transaction. So those borrowers that face a large order, like some of the major container liners, they may face exposure caps with their natural lenders, and the leasing money is a great solution for them. So I can see the appeal of this product to some of the major borrowers.
I think also what the challenge is for the more European banks, and perhaps also the American banks, is the cost of capital.
Yep.
And that's where regulations have come in and will be even more stringent. And our capital is becoming more scarce and more expensive because of all sorts of reasons. And that's where, again, I think some people are stepping in with cheaper capital.
Well, I think that, Joep, thank you very much, because that was bringing me on.
Can I just make one comment? Yeah. I mean, I remember when we used to talk to owners used to bilateral relationships about syndication, and a lot of concern of owners was who is my lender, and what happens when I need a waiver and all those sort of things. And I think as many shipping conferences, whether they're finance or broader, complain about either too much money or not enough money. There's lots of money around all the time, and what we're seeing, particularly with the Chinese, is a natural, provision of capital, whether it is directly related to Chinese built ships or not. But in the end, what a borrower has to be concerned about, whether it is accessing banks or accessing capital markets, is what is the overall makeup of their funding. And so from a relationship perspective, you may get a very good deal today, but in order to make sure that your relationships with your capital providers are sustainable and friendly and work together, whether it is an American, German, Dutch, or Chinese institution, you've got to sort of manage that. So my only caution would be any owner who gets overexposed to one particular group of lenders is taking some sort of risk that they may find it difficult to manage those relationships at some point in future if they get into difficulty.
Well, I think we've seen in transactions how perhaps the Chinese leases are seen as possibly more covenant-like, less restrictive than some bank facilities. But of course, the leasing transaction is inherently less flexible than a bank loan. You don't have the same ability to refinance it and to repay it. I think my next developing on, we still have on this list here, we have an industry dominated by the European banks, and DNB here, KfW, Nord, seem to have avoided the requirements of regulators, which have caused other banks to reduce their portfolios. How have they done that? And is there anything particular they're looking for which will allow them to lend more?
No, the reality is that regulation has increased tremendously in banking, and all of us feel that. DNB, we are the largest in the industry. That's not out of choice. Some of our competitors have reduced faster than us, so we found ourselves to be the biggest, but that, again, is not really our target. We've seen an explosion on the leasing side, just to take a little bit of a step back, and that is a very welcome addition, because the way we at DNB see our business model is we are arrangers of capital for our clients. We are not there to provide the cheapest money, but we are there to provide different alternatives. And, we used to be very big in arranging syndicated loans. We still are. We are very active in arranging leasing transactions. We have ICBC here, but there are a big number of leasing houses in Asia springing up every day. So we have been bringing this capital to our clients. We've been bringing export credit to our clients. So it's very much, as Michael said, the portfolio. You have to look, as a ship owner, at your capital structure, not be exposed too much in one area, and try to figure out for each situation what's the best opportunity you have. And that's how we see our role at DNB, is providing these alternatives to our customers and explaining what makes sense for each. And it could be a bilateral, or it could be a syndicate, or it could be a leasing solution. So that's where banking is transitioning, really, at least in our eyes.
Which again, why it's important that banks like ourselves, we take a global view, not only on our client base, but also on those solutions that we can bring to our clients, such as Asian capital, ECAs, equity from the States. It's a global business, not only from the ship owner's point of view, but also from the solutions on the capital side.
Also, then one comment from my side about relatively, because we got pretty good in the rating system and from the Moody, from S&P, so we can raise relatively cheaper money from the ICBC banks or from ICBC Leasing. So structure is, we have already cooperation with a lot of European banks, but also with the Chinese banks as well. Basically, we do the sales lease back. Also, we sell those assets to our Chinese banks. So basically, like, we work together. It's like a pipe. So basically, you got the deal, pass to ICBC Leasing. We finish the transaction. We further sell to our ICBC banks or other Chinese banks further. Or we have a further, like, some of the asset management company, either owned by the Chinese government. They maybe only, achieve a very little return, but safe return is okay. So the fact we can prove the shipping asset is a good asset, they don't mind to buy this asset further. So that's why the demand from Chinese leasing, or in general from the Chinese capital market, is huge for the shipping business.
Bill, maybe I can ask you a question on your product. We see indeed also leasing activity from Korea, Japan, but it seems to be with lower volumes per transactions than China. Mm-hmm. Do you think that will change? Do you expect more competition from Korea, Japan, also in terms of volumes?
Yeah, we do see, but again, fundamentally it's compete with the cost of the capital. So I think, if we measure everything in the US dollar, I think China still will have the advantage for our capital of the cost. And for example, last year and in general, and China leasing, including ICBC Leasing, we financed about $15 billion. But our budget maybe overall is 20 billion. So we still have room to grow. Actually, it's just we're looking for the good project. And ICBC Leasing, we only did about $3 billion finance, and last year. So this year we may do the similar or even bigger figure. So every year think about, and it's about 20 or even more billion US dollar budget, to be fulfilled by the China leasing company. So the room is big.
Still keeping on this globalization and localization scheme, one of the features of some comment has been that world industry has seen a certain amount of onshoring, and with robotics, with 3D printing, with manufacturing coming closer to where the markets are, that possibly the rate of growth in world trade, particularly in containerized trade, may not be so obviously on a continuous upward trend if the costs of actually building consumer products in a robot-controlled robot-populated factory in the US is less than building them in China. Is that something which you as banks look at and concerned about the long-term life of a large container ship of 22,000 TEU? I mean, is that a concern to you? And I don't know whether Bill, you can make a comment.
Oh. Of course, in general, we like the big ship, and the reason because of the cost again. So the bigger one, of course, and the per unit cost will be reduced. And in theory, of course, based on the real operation, maybe it's a different story. But China has very good, and I would say, infrastructures in all these major ports like Shanghai, Yantian, or Tindall. So all these ports, they can support these in the big vessels, and 22,000 TEU ships. But the destination in Europe, maybe in the US, especially the US, they can't port these kind of big ships. So that's kind of the challenge right now, and for those ships. From the financing perspective, we don't mind. Actually, we're very actively involved in those big shipbuilding because in China right now, the shipyard is capable to build these ships compared with maybe 3 years ago, only the Korean shipyards can do that.
So no concern that changing shapes of trade will mean these large ships will no longer be in demand?
It's also because I think the container shipping is a consolidation. So the COSCO finished consolidation with OCL, and also the other similar consolidation. So in my opinion, for this trade lane, it's only maybe in the few players in this market, which means to protect their profitability.
Robotics and nanotechnology and all these things, may have long-term implications for society. Shipping has been very adaptable, and we all know that global trade is the enabler of develop economies, and so we should expect China, Asia, Africa to depend ultimately upon shipping to help them develop. Now, I think the two issues that shipping faces are increasing regulation, ballast water, low sulfur. So I think it needs to get used to, like aviation, a much more regulated industry, which may have impact on the physical side of shipping, and that may have an impact on the life of ships and the ability to retrofit whatever requirements, whatever. So I think that much more than robotics and anything else will impact it. And I think the second thing is capacity, and we have a great opportunity now as a result of the disastrous decisions of both banks and ship owners in the last 10 years to try and avoid repeating the same cycle of mistakes by ship owners realizing that if you keep supply short, you will actually make money. So the danger of unnecessary ordering is far greater threat than robotics or nanotechnology.
I suspect most people on the panel would agree with that.
Yeah, I think we just, before we started, made the calculation, right, that a normal order book should be something around, what was it, 8, 9, 10%. But in most cases and in most times, the order book of ships of almost any kind is much higher than that. And that is, I think, the big problem in the last 10 years. And that's a sort of discipline on new building. I like new buildings as long as they are, as long as the next generation is more eco, if you like, than the previous one.
You said your colleague in New York said you weren't going to finance any new buildings.
Yeah, correct. There's a new kid on the block now. No. But,
yeah, but you didn't want to encourage people by.
I think when exactly as I said, if the new building is more eco, then we'll have a very good look at it, because that makes a lot of sense. Replacing the cars on the road by electric cars is in the end a good thing. Electrification, replacing ships on the water by more eco-friendly ships, more sustainable ships, is a very good thing. That should happen. So in that respect, I like that. On the other hand, it's of course not good for the supply-demand equation, and that will be a very big challenge, I think, going forward.
Have you met an owner who doesn't have an eco ship?
Yeah, met a lot of owners who.
Few ships.
Yeah.
Okay.
I met a lot of owners who have an old fleet, and that's, I think, something that is tough in the future.
No,
Christos.
I would say we need to exercise a little bit of caution. And if we look at some of statistics, I was looking at an IMF study some time ago, and in the 90s, and a 1% increase in global growth would lead to a 2.5% increase in trade. In recent years, a 1% increase in global growth is yielding only a 0.7% in trade. So that tells you that there is a reduction. And that's because of the factors that you mentioned, Dan, before. Also, if we look at the traditional markets, and I think Michael alluded to it when he spoke about emerging markets in India and China, if you look at the Asia-Europe route on the container side, in the second half of 2018, because of the bigger ships, we are expecting to see an 11.5% increase in capacity. So this is telling you that there should be a challenge there. Shipping is very creative. Ship owners are very creative. I think you will see a pickup on different routes. I think you will see a pickup on the emerging markets as India develops, as China develops. But at the present time, I think it's very important to exercise caution when it comes to funding new buildings. I think that's very important because the statistics are showing a trend, and we just need to be aware of that.
Yeah, I agree with Christos. We also recognize that the increase in growth does not result in the same trade increase as before, and that's exactly, I think, the reason for your question. With wage increases in China going up quicker than, for example, Mexico, you do see some shift of manufacturing closer to the consumer, and that does have an impact on shipping. But surely the supply side of the balance, the ordering, that's what's going to drag down the industry if we're not disciplined there. The demand we can manage with the flexibility of our clients.
Good. Well, I think many people have credited the slowdown in credit with perhaps helping and save the shipping markets from themselves, the difficulty in financing ships and making it more easy for owners to restrain themselves from ordering more ships. So I think we hope that we'll end up with a better market for all of us. But I don't know, Michael, do you want to make a last comment?
No.
No?
Well, I'm sorry, I'm not having a go at you, but you do stand out on that chart above us for the growth of your portfolio in the last 2 years.
Yeah, we've been very busy, and we are actually very busy. As someone said before, we don't necessarily want to be the biggest. We want to be valuable for our clients and for new clients. And indeed, as Christos was saying, then it comes to providing the best solution for that capital structure of that client, and that can be any sort. And if it is using our balance sheet, then that's fine. Then we'll do that.
And presumably part of these changes is in fact the acquisition of existing portfolios rather than new business.
We have bought small parts of other people's assets. Yeah, and that's. But there's always a reason for it to do that. Usually, there's a client angle and a client reason to do that.
Good. Well, I think I should thank everyone for very interesting contributions, and thank you very much.
Thank you.